Hello everyone, welcome back to the Road to Retiring channel. I hope you're doing well. Today I want to speak about how to calculate the fair value for a stock and how to estimate what the future price of that stock could be. Now, if you want the really quick version of this and you don't want to go through setting up a spreadsheet of your own, I do have a link in my description to my Patreon, which is available for as little as $1 a month, which you can pay however much you want for. Above that, it's more of a tip rather than an actual payment. And that will pull in all of this information you see here and allow you to just put in the fields in yellow rather than doing any of the other calculations available. But you want to work out how to do these calculations for yourself and how the functionality on those sheets work. I'm going to talk about that a bit today. The first thing you'll need to know is the market price of your stock. What is the value of this right now? And for all of these, I'm going to be using Google's values at the moment, just so you have a good reference point to understand it from. So the market price for Google is $94.56. So we're going to put that in up here. Then you want to apply your discount rate. This is how much returns you would like to see annually. So if you set this to 10%, when you calculate and estimate your future price in 2028, this is then going to take 10% off of that price every year back down to 2023 so that it can work out what your fair value is in 2023 so that you can see those 10% returns. Now, for margin of safety, this is just an additional percent which is going to be applied to your 2023 value just to make sure that you're being a little bit on the safe side and you have that extra room of safety on your buy prices. So let's say we set this at 10%, for example. Now your growth rate, this is how much you think earnings are going to grow by over the coming years. If you are to look at Alphabet, Google for example, you can see that the growth estimates for Google over the next 5 years are 15.51%. So if you believed that was going to be the growth rate, you'd put 15.51% into that growth rate expectation, and then you've got to apply your price over earnings multiple. Now, you can do this for any multiple. You could do it for price over sales, and if you wanted to do this, you just have to change earnings and EPS to revenue and revenue per share. And if you wanted to do it for cash flow, exact same thing, just change earnings to cash flow and earnings per share to cash flow per share. But that's just the little things that you'll have to change if you want to do different multiples in your calculation for this. But for the PE multiple, for Google, you can see that currently it's around 20, the sector median's around 18.68, and the 5-year average is at 31.02. You may choose to set it somewhere around 23, 24. Obviously, you'd put a lot more thought into this process if you were actually calculating what the estimated price for Google would be, but I'm just doing this very quickly just to show you how the functionality works. Now for share dilution, for this you'll want to have a look at the historic shares outstanding for Google. You can see in 2016 there was 13.83 billion shares, and right now currently there are 12.81 billion shares. So it looks like they buy back a decent amount, but nothing too crazy, so maybe around -1% is what you'd look at for this. As I say, you can change any of these and you should put more thought into this because there may be announcements for buybacks that you haven't heard of, so just make sure you're checking these things before you put the values in yourself. When you look at shares outstanding, again, you just have to have a look. Shares outstanding, total common shares outstanding, currently 12.81 billion. Now an important thing in this calculation is don't just put 12.81 in, because all the numbers we're going to use in this are going to be in millions, so we're going to use 12,810. Now you can do your first bit of calculating what this will be in the future. In 2024, this is going to be the shares outstanding minus that 1% share dilution. So you'll want to set this to equal the shares outstanding and then times this by the share dilution. So that will be 1 minus H4, and you want to put that in brackets so that that works. And it's actually 1 plus H4, sorry, not 1 minus H4. There you go, and that then gives you that -1% share dilution, and you can then drag this out to 2028, but you have to make sure you're using the reference for H4 as currently when I dragged that out it was for I4. So now when you do this, You're going to see that's going to work. And at that minus 1% share dilution, you're going to see shares at around 12.1 billion in 2028. So if you think that's maybe too high still, then you might want to up that to -2, and you can see how that will impact the shares outstanding. Now the next thing you're going to want to do is look at the EPS value expected for 2023. Now to do this, it's really easy. You look at Google, you go to earnings, annual and 2023 estimates right there on TradingView at $5.15. So that's what we're going to put in here. And then once you have this, you can calculate what the total earnings are, because you have the earnings per share and you have the shares outstanding. So for the total earnings, this is going to be the earnings per share times by the shares outstanding. Now you have this earnings value, you can work out how this is going to be impacted by growth. If there's 15.5% growth rate expected, then you can change these earnings and increase them by that 15% for 2024 and drag that out to 2028. So here, this will equal the value that it is in 2023 times by 1 plus, and then you want your 15%. Again, make sure you're putting these in brackets. That gives you your earnings expected in 2024, and again, you want to make this reference absolute so that you can drag it out, and that will give you the earnings expected in 2028 based on a 15.5% growth rate. Now that you have your earnings in 2028 and your shares outstanding, you can calculate what you think the EPS will be in 2028. To do this, obviously, you're just going to make this equal to the earnings divided by the shares outstanding, and that's going to give you earnings per share of $11.14, and you can just simply drag this across for everything for every year. And now lastly, what you want to do is calculate the fair value in 2028 for that estimate, because you have the earnings that are expected per share, and you can use this price over earnings multiple times that by the earnings. It's going to give you the price in 2028. So this is going to equal the earnings per share times by that price over earnings multiple, and that's going to give you a fair value in 2028 of $256.13. So now this is where your discount rate comes in. Because you want that 10% return each year, you want to make sure that this 2027 value is 10% lower than it was in 2028. But to do this, you're going to make this value equal to the value in 2028 times by 1, and then minus your discount rate. That's going to give you the value in 2027. And again, you set this reference to absolute so that you can drag it out, and you can bring this all the way back to your fair value in 2023. But there is one last thing that we need to do, and that is to update this fair value with our margin of safety. So lastly, you times this by 1 minus the margin of safety, and that's going to give you your fair value in 2023 right now at $136.12 for Google. Now that is if you base it on these estimates of a 15.5% growth rate and a price over earnings multiple, which we didn't really check. We just went with the analysts and somewhere between the 5-year average and what it is at currently. So I highly encourage you to put a lot more research in to these values when you're doing it yourself. I just wanted to explain how you go through those calculations. And if you wanted to do this for price over sales, then you change the price PE multiple here to price over sales, you change the earnings to revenue, and then the process is exactly the same. You would go to, say it was 1 as a price to sales, and then you'd update the revenue, but I don't want to go through all that because you have just seen exactly how everything works. As I say, if you want access to a sheet which is going to automate a lot of these processes for you, or just maybe bring in a lot of the values for you yourself, whereas it will show you how the share count has changed and it will give you an estimation of what the future share dilution could be. It will give you estimations on a fair price over earnings, price over sales, and price over operating cash flows to use. If if you want this sheet that's going to drag in all of that information yourself, and then you can put in the information for the price over earnings, price over sales, and price over cash flow, take an average of all of them, and it will include dividends as well. If this is something you're interested in, then please do go to my Patreon, and there'll be a link to that there in the description, and you can pay, as say, from anything as little as $1 a month, and it is completely up to you how much you decide to pay for this. I hope that was informative and you've learnt something today, and if there is anything else that you have questions regarding this and how to set it up, please do let me know in the comments, and if you enjoyed, please like and subscribe. And now, it's been Road to Retiring, and I'll catch you in the next one. Bye guys.